Look at the Nifty values during the last fortnight. Nifty touched the low of 10,637 before closing at 11,023. Support at 10,630 was clearly mentioned in our previous video, Nifty Technical Analysis. Welcome to action-packed episode of Economy and Markets for second fortnight of August 2019. The heavy surcharge announced in budget is now rolled back on long-term and short-term capital gain from equity shares and equity-oriented mutual funds. In a major step towards PSU bank restructuring, 4 new banks are created by merging 10 existing PSU banks. The step which nation should have taken long back to make the robust banking system, better and faster NPA management, and to make its presence on world financial map. Considering the size of our economy, its growth rate, and India's role in the world market, we need super large world-class banks. Proper planning on surcharge before making it budget proposal and also announcement of banks merger should have been part of budget itself. This could have made budget look more economy and market friendly. Though the markets are reacting to economic slowdown, but the negative news of heavy surcharge announced in the budget accelerated the pace of market meltdown. This portion of accelerated market meltdown could have been restricted to some extent with appropriate handling of surcharge issue. A proactive plan is always better than reactive rollbacks when it comes to budget proposals. Based on the recommendation of Bimal Jalan Committee, RBI board has approved transfer of rupees 1.76 trillion to government. This amount represents 1.23 trillion towards dividend and rupees 52,637 crores towards surplus capital, which is calculated as per the formula provided by Bimal Jalan Committee for transfer of future surplus to government. The committee has recommended that RBI should keep 5.5 to 6.5% of its assets as a contingency risk buffer, and the balance funds may be transferred to government in future. Present contingency risk buffer of RBI stands at 6.8% of its assets, and calculating the same buffer at the lower band of 5.5%, there is a surplus capital of 52,637 crores, which is also being transferred to government. This move will add extra liquidity of 58,000 crores in government kitty, as out of 1.76 lakh crores, 28,000 crores are already paid to government by way of dividend and 90,000 crores rupees were already accounted in the budget proposals. Now the question is, how these windfall funds of 58,000 crores will be handled by government? There are a number of options, like providing economic stimulus to falling economy, or to handle fiscal prudence more systematically, considering the fiscal deficit limit of 3.3% of GDP set in the last budget. There are also chances of less revenue receipts during the current financial year in view of falling economy. Moody's has reduced the GDP growth forecast for the calendar year 2019 from earlier 6.8% to 6.2% now, with April-June quarter GDP growth rate touching 6-year low at 5%. The slowdown in Indian economy is now certified. Economy is considered in slowdown mode when GDP growth rate goes down quarter to quarter. An economy is considered in recession when the size of economy contracts due to negative GDP growth rate, which is not expected in Indian scenario. As economic slowdown is now confirmed, and automobile sector is the worst hit sector due to slowdown and other factors. In such scenario, whether industry should be supported from taxpayers' money by way of stimulus package or not is a topic of debate. To counter slowdown, industry always expects some relief from government, which is obvious from industry point of view. However, if we look at the problem from different angle, is it possible to charge windfall tax on corporate profits when a particular sector in its rosy phase is making supernormal profits? And whether these economic challenges are not part of business risk and challenges. Again, there are mixed answers, and the more appropriate answer lies somewhere in the degree of damage due to slowdown of particular sector on socio-economic condition of nation. This degree of damage will decide the time and quantum of support to particular sector by way of stimulus package from taxpayers' money. On economic data, Nifty remained flat at 11,023 during last fortnight, whereas Nifty Midcap 50 fell by quarter percent. As far as technical charts of Nifty are concerned, Nifty is now fixed in a triangular pattern with resistance at 11,110 and support at 10,630. Nifty breaking either side will continue its pace in the same direction. US dollar stood at rupees 71.76 and Brent crude oil is almost at the same levels of US dollar 59.08 per barrel. GSEC is also at almost same levels of 6.56 as compared to 6.61 in the last fortnight. Thanks for watching.